Have you ever been in a situation where you've been analyzing charts for a period of time, a few days, weeks, few months even, and you look back over that time and you have so much more information, so much knowledge about the charts, but at the same time, you don't really have much understanding of what is happening and how you're going to take advantage of these opportunities. You've done a lot of work, you spent a lot of hours at the markets, but still not really anything to show for it, not any confidence in the market, how you're going to enter, how you're going to manage trade, how you're going to manage risk, and how you're going to profit from the market in the long run. Now, this does come back to analysis paralysis, looking at a gazillion different things, having a gazillion different ideas, and not really knowing which idea to implement, which idea to stick with. From my experience and seeing other traders' success as well, there is no necessary path to follow. Most paths in trading, if not all, do lead to the same destination. Really, the skill is in the application of whatever method, whatever technique you are mastering. And that really is the key, mastering that technique and method. And I want to break the charts down and keep things very, very simple. So people who are stumbling over their own feet after spending hours, potentially days, weeks, months, maybe even years at trying to learn how to trade, but still really haven't progressed and still don't really know the path to follow, I'm going to hopefully provide you with some ways to analyze the market, to keep things simple, and know where most of the time you should be looking to buy, sell, and how to look to manage your positions. But on the chart, I've got Kajin and the 4-hour chart. I'm just going to walk you through my point of view of how I look at the market, because there's a lot of information here. There's numerous candlesticks on the chart. Market's doing this, market's doing that, higher time frames doing this, lower time frames doing that. There's a lot going on, but you want to keep things really, really simple and then become effective at that approach. And how I look at the market is just simply where the buyers, where the sellers, and I want to position myself well in where the buyers are sitting and well in where the sellers are sitting, majority of them, of course, because they'll be all over the place. But I like to look at the market in channels or in ranges, even when we are trending as well. So for example, in front of us, this is Kajin in the 4-hour chart. Just straight away, keeping things very simple, I can see the market's quite flat. That's more or less the highs, this is more or less the lows. So if I'm looking for opportunities, my thought process is looking for opportunities at the extremes, near the highs, near the lows. Straight away, anything in here I do want to stay away from because we're flat. This is where a lot of the noise will be, a lot of the fluctuation will be, and I don't want to be caught in the middle of that. So whatever really your technique in terms of looking to trade and find entries, just in general, by default, looking for any opportunities, no matter how good the strategy is, in the middle here is just going to expose you to more fluctuation and more noise. You could still win a trade, but it will be a lot harder to do that rather than waiting for price to approach these areas where there's going to be more critical movements in the market. So either we're going to see breakouts or price reverse. And depending how you want to trade and what you're looking for, whether you're looking for breakouts, fake outs, looking for price to respect the level, pull back and retest, whatever you're looking for, these are the opportunities where you want to spend most of your time and most of your effort. So when price is in the middle, you want to stay away. So again, this video is just to provide you some context of where you want to be focusing your efforts. So you're not looking at a chart thinking, okay, I need to find a trade here, I need to find a trade there. No, you don't. You need to focus on the areas which will provide you the most fruits for your efforts. If that's that word, provide you the most juice for the squeeze. You guys you get what I'm trying to say. You want to focus on the areas where price is going to have the most room to make a move and where it will be smart to position yourself away from all the noise. And in a trending environment, if you look to our left, previously KGM was in a very nice trending environment. You can see a bunch of higher highs and higher lows. We were trending pretty well until we did break that counter trend line and price starts to range. And again, in this type of situation, when you are following a trending market, again, you will get different types of trending markets, really aggressive ones like potentially gold is now, or more corrective trends like you'll see here, or even more corrective than this. But typically, again, if you're looking to take advantage of a trade, you're either looking to buy or sell. There's no third option. You're either buying the market, selling, or of course, maybe not doing anything. There's only two options you can do in the market. And typically, you want to focus your efforts at the lower end of the channel here. These are where you're going to try and catch the next swing low. If you expect the market to continue the trend, this is where you want to position yourself for the buy. And typically, if you're looking to go counter trend, trying to catch the highs, if you're looking for reversals, again, nothing wrong with that. More aggressive approach. But if you're looking for those opportunities, Well, typically you're going to be closer to these areas up here trying to predict the highs. So again, when price is in the middle here, you don't want to be doing anything. That's where a lot of the noise is. That's where a lot of the fluctuation is. And again, a lot of people will be trying to find the smaller details, the smaller intricacies in the market because they've got a new strategy or whatever strategy that can tell them exactly when the market's going to do this and do that. Sure, you might find some opportunities in there. I'm not saying you will never win a trade, but it's going to be a lot harder because of the conditions of the market. And that's just purely focusing on the conditions, not necessarily the strategy itself, just the conditions, that how price fluctuates. You will find a lot more noise here. You'll get stopped out more frequently versus when you're in these areas. Again, you'll still lose trade, you still lose trades, you still get stopped out, but you're in a more effective position to try and catch the next swing of the market if you are looking to follow the trend. And likewise, we're trying to catch highs, you're in a more effective position to do that. So in terms of when I'm looking at the market, I'm trying to gauge, okay, are we sideways? Are we trending up? Are we trending down? Okay, if we're an uptrend, how steep is the trend? Is it something where I'm looking for aggressive pullbacks or am I looking for deep pullbacks? Well, if it's a corrected trend like this, are we looking for deeper pullbacks into this area? It doesn't necessarily have to be a test of the trend line, but I know this trend line will provide a nice reference point for how deep the pullback could be. Potentially, this could still be a pullback. I still do actually expect CAD Yen to push higher. I don't think this counter trend line is necessarily a break in terms of the trend. Technically, we haven't broken through structure yet, so I'm still pretty bullish on CAD Yen. I'm looking for more upside. But I know the phase we're in now. We've broken out of this bullish channel phase and now in a bit more of a sideways phase. So if I'm still very bullish on Kaji and I'm still expecting price to go higher, well, I'm going to focus my efforts down at these lows where I know that price has had trouble trying to break lower previously. And if I can wait for strong entry confirmation signals at these areas, perhaps even a fake out, I can position myself very well with entries and stops in the safe areas where if we were to capitalize on a swing to the upside, I'll position myself very, very well to take advantage of that to the best of my ability, where my entry is safe, my stop loss is safe, and it gives me the best risk to reward back into resistance and maybe further it as well if we do go and continue that trend. So because we're in a new phase, I'm going to treat the market differently. And likewise, we're in a bearish phase, when we have a bearish trend. This is to some degree, and again, not every channel will be perfectly symmetrical or proportional. Some will look a little bit different, but you can tell and gauge roughly the areas you should be looking to sell. If it's an aggressive trend like what we have here, you can see the trend line is a lot steeper. You're not looking for as much deeper pullbacks in this scenario. But if you're focusing on this structure, you would look for a deeper pullback like we got here. And again, trend lines are just good reference points. They predict areas where price can turn based on previous highs and lows the market has made. So by creating these channels of bearish, bullish, and of course sideways, you can help position yourself in smart areas. So no matter what strategy you're looking at, break and retest, pullbacks into moving averages, you're looking at indicators, becoming overbought, oversold, breakout strategies, you can effectively position yourself well in the markets by having these as reference points. And it really does help with analysis paralysis because there's a million different ways to trade the market. But at the end of the day, the market is going to form a high somewhere, it's going to form a low somewhere and turn. And these channels allow you to position yourself well and have good reference points. Like I said, you don't have to necessarily wait for a test of the trend line every approach because trend line's not perfect either. The market's not going to respect every trend line to a T, but those are the areas where you can look to do most of your business and position yourself well. And this allows you to be patient as well, because you know when price is in the middle of a channel, there's nothing to be done because you know that's where a lot of the noise is. And again, with sideways market, that's especially true as well. So keeping things simple, knowing the areas where you want to do your business will allow you to relieve a lot of the pressure. And then it comes to your methodology in terms of your entries, what approach you're looking for. You're looking for pullbacks, you're looking for counter trend trades, you're looking for breakout opportunities. That then comes to the selection of what style you're looking to operate. I like looking for mean reversion opportunities at lows and highs. Most of the time I'm looking for pro trend opportunities, but sometimes I will look for counter trend opportunities if I do have some higher time frame confirmation, suggesting maybe the higher time frame is really bearish and maybe I'm counter trend on the lower time frame, but I'm pro trend higher, so there's a bit more an advantage there. Just keeping things simple, position yourself where probability does lie. I know there's a greater chance the market does form a higher low here than the middle, or lower high or a higher high at the high end of the channel rather than in the middle. That's where I want to position myself. You don't need to try and beat the market in terms of, oh, I know what price can do exactly every moment. You don't. You just need to pick your moments and pick them well. I know it can be a very lonely road, especially when you've got a lot of information, a lot of different angles to look at the market, but you don't really know which angle to follow. Sometimes just keeping things very, very simple, know where to buy, know where to sell, and then you can apply your strategy. Then you can apply your techniques in those areas. So when things are in the middle, you know to stay away, because that gives you such a calm mind. Because when you open the charts, you're not trying to look for trading opportunities straight away. You're more so looking, okay, where is price? Is price at an area where it makes sense to do some business? Yes, okay, let's investigate more. If not, you can set alerts, go about your day. And that makes trading a bit more stress-free, a bit more systematic, and provides a bit more structure to your trading, which is huge. If you don't have any rhythm in the markets, you're not going to get very far. So hopefully this video has provided some of that value. We do more more videos on this topic, so do look out for that. If you have enjoyed it, drop a like, subscribe to the channel. Have a great day, guys, and I'll catch you all in the next one.